Welcome all to the Department of Energy's SBIR STTR Programs Office webinar. My name is Zina Al-Yusuf, and I am with the DOE SBIR Programs Office, and along with Chris O'Gwin, we will moderate today's webinar. Julie Dempsey is today's presenter. Julie is a DOE accountant with many years of federal grant and acquisition experience. She will introduce you to indirect rate methodology and direct cost associated with SBIR and STTR awards. During the webinar registration, we did receive a number of questions, and Julie will work as much of these as she can into her presentation. If during the course of this webinar you have an indirect rate question for Julie, please submit it via the text chat box on your screen, and Julie will and her team will address these as time permits following her presentation. If you have a question not related to indirect rates, we ask you to please hold these and direct those to DOE SBIR Help Desk using the contact information on the concluding slide. And lastly, after today's presentation, you will receive an email from us with a copy of the PowerPoint slides and a link to the recorded webinar. We will also post the recorded webinar on the DOE SBIR STTR website under the Funding Opportunities webpage. Once again, welcome, and now let's begin. Julie?
Thank you, Zina. And like Zina said, I work with the Integrated Support Center in Chicago. I worked with DCAA for 11 years, and I started working with DOE in August of 2012. So we started this workshop when we were working with different organizations, and we noticed there were different indirect rate models, and it was noted that there were several areas where there were consistent concerns. So we believe that this presentation should resolve some of the questions or concerns that recipients have with their indirect rates. The goal of this presentation is to provide you with an understanding of an indirect rate methodology and direct costs for SBIR and STTR awards. Additional information pertaining to the SBIR and STTR program can be found at the link noted on this slide. Additionally, in order to set you up for success, the presentation will also provide additional pertinent information for your award regarding audits. This presentation will start by giving a general understanding of indirect rates, what is a direct cost and what is an indirect cost. As we move along, the presentation will become more specific. What is an indirect cost pool and what is an indirect cost base? Finally, we will end with some helpful tips for success. For your information, the link that lists out the requirements for DOE's indirect rate requirements is listed on this slide. Please ensure to read, understand, and comply with the requirements, and the link will have information that may be useful for grant recipients, including instructions for completing the grant application, guidance for indirect rate submission, and sample indirect rate models, and frequently asked questions. We are going to start by taking a look at the DOE SBIR STTR indirect rate review process. This will give you an overall understanding of what DOE is reviewing after your indirect rate model has been submitted. Before going in depth, we want to start by defining direct and indirect costs. FAR 2.101 defines a direct cost as any cost that can be identified specifically with a particular cost objective. These costs will be listed on the SF 424 budget. This includes direct salaries, the salaries of individuals working specifically on the identified project, materials, which are the cost of materials purchased specifically for the project at hand, equipment, the cost of equipment purchased for the purpose of the project, and travel costs that are incurred as a result of the project at hand. FAR 2.101 also defines an indirect cost as any cost not directly identified with a single final cost objective, but identified with two or more final objectives. Basically, these are costs incurred by the organization but are not directly related to the project at hand. These expenses are difficult to allocate to one project, for example, pens, paper, administrative labor. To reinforce the definitions of direct and indirect costs, we have provided a visual representation of how the indirect costs and direct costs are combined to result in the overall project implementation. As we stated before, direct costs are directly related to the project, and indirect costs benefit the organization as a whole. The end result is the implementation of the project at hand. Now that we have an understanding of direct versus indirect costs, we are going to narrow our focus to the area of indirect costs. An indirect cost is not directly related to a particular project. However, they are incurred to support a variety of direct activities within the organization. For example, the accounting department will provide services to the entire organization, not just one project. And office space and rent is typically easier to allocate or distribute using a rate than to specifically identify the cost of rent for each particular project. Indirect costs are added together and allocated or distributed to the cost of awards. DOE will incur its fair share of the indirect costs, and the goal of having indirect rates is to not significantly burden the grant recipient. There are different ways in which costs can be accumulated for purposes of the indirect rate model. The three most common categories are fringe benefits, overhead, and G&A. Fringe benefits are allowances and services provided to the employees and can include such costs as paid absences, payroll taxes, pension plan, or insurance. Overhead costs relate to the performance of a project and can include the salaries of supervisors, facilities costs, general lab supplies, etc. G&A costs are associated with the overall management of the company and can include costs such as executive administrative labor and office supplies. The indirect cost proposals are the way in which indirect costs are identified in a logical and systematic manner to be reimbursed under federal grants and agreements. Indirect costs must be sustained by an indirect cost proposal for the most recently completed fiscal year's expenses. The costs identified in the proposal must clearly reflect the total expenses per the financial statements. The indirect costs claimed by the organization must be supported by the actual costs incurred by the organization. While it is ideal to have actual costs incurred for the indirect cost proposal, DOE realizes that there are several small businesses that are just starting out and may not have any historical information. DOE also realizes that the past indirect costs may not reflect future indirect costs. Therefore, a company may submit supporting documentation for the upcoming year's budgeted indirect rates. It is very important that the budgeted amounts are a reasonable estimate of how the business model will look in the upcoming year. Overestimating indirect costs has the potential to require an organization to reimburse DOE for overcharging on the indirect rates, i.e., the proposed indirect rates are higher than the actual indirect rates for the year. When determining allowability, allocability, and reasonableness of costs, the Federal Acquisition Regulation, the FAR, is utilized. Specifically, DOE utilizes 31.2, which can be found at the link identified in this slide. So now that we have discussed in more detail what an indirect cost is and where the indirect costs come from, we are going to move into how to calculate an indirect rate. An indirect rate is made up of an indirect cost pool and a direct cost base. Indirect expenses are grouped into common pools, i.e. fringe, overhead, and G&A, as we discussed previously, and charged to benefiting objectives through an allocation process. Basically, the pool is the accumulation of common indirect costs, and for the calculation of the indirect rate, the total of each indirect cost pool will be the numerator. A direct cost base determines the direct cost categories against which the indirect cost should be applied. The base utilized will be how the indirect rates will be applied on the budget. For example, if direct labor is used to calculate a fringe benefit rate, then the rate will be multiplied to the direct labor on the SBIR, STTR, SF424 budget. For the calculation of the indirect rate, this will be the denominator. More detailed information regarding the cost basis will be coming up a little later in the presentation. And the purpose of this slide is to lay groundwork for what the indirect cost base is. FAR 31.205 identifies some costs which are specifically unallowable. Passing costs, sales, marketing, interest, bad debt, federal income tax, and entertainment costs are some of the most common unallowable expenses. These costs are expressly unallowable and cannot be charged to federal government awards. However, DOE does allow for patent-related expenses. I suggest referring to the funding announcement to see the exact amount of these and how they should be handled. We have identified the indirect cost pools and how the indirect costs are grouped together. So now we are going to talk a little bit about the cost base. The cost base should be a direct cost, i.e. direct labor, total direct cost. The base is the way that an organization decides to allocate indirect costs, and the base should result in an equitable allocation of indirect costs to all projects. The indirect rate is the ratio between the indirect costs and an equitable base. So you may be asking, what is an equitable base? The next few slides will discuss typical allocation bases and how to allocate costs. The most common bases that DOE sees are total labor, including direct and indirect labor. We typically see this base utilized for fringe benefit costs. This is because the types of costs included in the fringe benefits pool benefits the total labor cost. Direct labor and fringe indirect labor, we typically see this base utilized for overhead costs. This is because overhead costs benefit multiple projects which all have direct labor. Total cost input and modified total cost input. Total cost input incorporates all business input costs including variable, fixed, direct, and indirect costs. Modified total cost input is the total cost input base modified for the specific company. TCI and modified TCI are typically utilized for G&A costs because G&A costs benefit the entire organization. Once the indirect rates have been calculated on the indirect rate model, they will be utilized to allocate indirect costs to awards. Allocating basically means to distribute, and there must be a beneficial or causal relationship between the allocation base and the pool of costs. FAR 31.203 has additional information regarding indirect costs. Additionally, the methodology used must be consistent. For example, indirect rates will not be applied to equipment when equipment purchases are excluded from the allocation base in the indirect model. Basically, the indirect rate model that is submitted is considered to be your organization's supported rate. When applying the indirect rates on the budget, you must apply the rate to the same costs that are in the base. For example, if direct labor and fringe indirect labor is utilized to calculate the overhead rate on the indirect rate model, the indirect rate should be applied to direct labor and fringe on direct labor on the SF 424 budget. While it was noted earlier that unallowable costs cannot be included in the indirect cost pools, they can be included in the G&A allocation base and absorb their share of expenses if your organization is utilizing a total cost input base. The unallowable costs are treated as final cost objectives, and for your reference, FAR 31.203D provides details regarding the inclusion of unallowable costs in the G&A base. DOE utilizes three types of rates. Provisional rates are based on projections for the current year. Final rates are based on actual costs. And ceiling rates are the maximum allowable rates set by the Office of Acquisition and Assistance during the awarding process. The final rates, even though they may be higher than the ceiling rate, may not exceed the ceiling rate. Looking at the structure of the indirect rate model, there are three common ways to see grant recipients set up their indirect rate models. As can be noted from this slide, each of the structures build off of the one before it. A one-tier system is one where all indirect expenses are placed into one cost pool, and the typical base for this is total labor, direct and indirect. This is a simple structure and may be beneficial for a startup small business. A two-tier system is one in which indirect expenses are allocated into two cost pools. We typically see this using a fringe benefit, which the typical base is total labor, and overhead, where the typical base is direct labor and fringe on direct labor. This structure is popular for a grantee that may want to segregate the fringe benefits from the overhead costs and use two rates. A three-tier system is one in which indirect expenses are allocated into three cost pools. This uses a fringe benefit, which the typical base is total labor, direct and indirect, overhead, which the typical base is direct labor and fringe on indirect labor, and G&A, where your typical base is TCI, or modified total cost input. This is the most frequently used rate structure by grant recipients. This slide has an example of each of the previous mentioned indirect rate structures. The presentation will be available after my presentation, so you can click on each of these workbooks and review the different structures, and I recommend spending time to review the sample indirect rate proposals which are attached. So this is the worksheet tab of the three-pool workbook. Because the indirect rate model should consider one full year for your organization, the trial balance column should match your organization's accounts. In this tab, we can see the different costs being allocated to different cost pools, and the best example is the labor line. You can also see how certain costs are allocated to the unallowable overhead and unallowable G&A columns. While the notes section to your far right was cut off due to space constraints, they note reasons why the costs are unallowable. This tab demonstrates how the costs, while being allocated, are all accounted for, i.e. the trial balance total equals the proof total. This is the fringe tab of the three-pool workbook, and this tab shows the calculation of the fringe benefit rate. The pool total of $170,450 matches the fringe benefit total on the worksheet tab. For calculation purposes, this pool is also called the numerator. This base is comprised of total labor, direct labor, overhead labor, G&A labor, and IR&D and B&P, or your independent research and development, and bid and proposal. Also note that the base total equals the total labor from the worksheet tab. For the calculation of the rate, this base is also considered to be the denominator. Since fringe is applied to total labor, portions of the fringe benefits will be added into the other cost pools. The amount of fringe to be added into the pool must equal the total of the base labor times the fringe benefit rate. This is the overhead tab of the three-pool workbook. This tab shows the calculation of the overhead rate, and the pool total of $247,310 matches the overhead total on the worksheet tab. For calculation purposes, the pool is also called the numerator. The base is composed of direct labor and fringe on direct labor. And for calculation of the rate, the base is also considered to be the denominator. So the pool cost of $247,310 divided by the base cost of $565,662 gives us the overhead rate of 43.72. This is the G&A tab of the three-pool workbook. This tab shows the calculation of the G&A rate. The pool total of $147,328 matches the G&A total on the worksheet tab. For calculation purposes, this pool is also called the numerator. The base is total cost input, and for the calculation of the rate, the base is also considered to be the denominator. So the pool cost of $147,328 divided by the base cost of $969,772 gives us the overhead rate of 15.19. So now we want to talk about some common issues that arise when reviewing indirect rate models. So we often see that grant recipients believe that unallowable costs cannot be anywhere on their indirect rate model. However, when the TCI base is used, the unallowable costs from the overhead cost pool should be included in the G&A base. We also see a lot of unallowable costs that are left in the cost pools, for example, interest, bad debt, and entertainment. These types of costs cannot be in any of the cost pools. We also see where the methodology is inconsistent and the grantee is not applying the rate to the correct base. For example, an indirect rate model using direct labor and fringe or an overhead rate is only applied the overhead rate to direct labor. So for the rate methodology must be consistent. In addition, if these issues are caught during the indirect rate review process, it will result in an increase in the amount of time that it takes for your awarding process to be completed. That completes our discussion on indirect rates. However, before we conclude, we wanted to provide you with some other important information regarding audits. If your award was issued after December 26th of 2014, you must comply with 2 CFR 910.501. 2 CFR 900.501 requires an organization to complete an independent compliance audit if it expends $750,000 or more in a year under federal awards. The audit is due 9 months after the end of the audit period, and the link in the slide will take you to 2 CFR 910.501 on ecfr.gov for your reference. The goal of this presentation was to provide you with an understanding of indirect rates and to position you for success with your indirect rate model. So what do you need to do to be successful? Ensure that you carefully read DOE's current documentation requirements, include all requested information on the first submission to ensure an efficient review process, respond timely to requests for additional information. Please note that the contract specialist that you are working with will most likely not be contacting you regarding your indirect rate model. So don't be alarmed if you see another person from DOE contacting you. You should also ensure that all unallowable costs have been removed from the cost pools and ensure that the methodology used is consistently applied. So on behalf of DOE, I would like to thank you for your time and attention, and I hope that you found the information beneficial. At this time, I would like to answer any questions that anyone may have. So one of the questions is, where can we download the slides and example spreadsheets? After the webinar has completed, the spreadsheets and the slides will be emailed out to everyone who has registered. So another question is, why is IR&D B&P part of the direct base? Per the FAR, I believe it's 31205, IR&D and B&P should be included in the G&A allocation base as direct costs if you are using a total cost input base. So the next one is, so we did have another question about the copy of the presentation. I already answered that one. That will be emailed out after the completion of this. So the question is, are indirect rates considered part of the minimum of 2/3 or 67% of the research or analytical effort that must be carried out by the applicant during phase 1? So my colleagues in the room are telling me that that is yes. The next one is, do the DOD and DOE handle rates consistently? We do handle rates consistently. If you have approved rates from DOD, we will use those if they're within the last 12 months. The review process is a little easier at DOE versus DOD. What indirect cost structure do you recommend for a new startup company? We don't really advise you on what indirect rate structure would be best for your company. You can look at the spreadsheets that we've provided and go over the presentation and kind of look at it for your business. I also recommend hiring a consultant that might be able to help you with that. So the next question is, why is the importance of indirect cost rate, and does DOE focus on this rate whether it is less than 50% or not? Yes, we do focus on the rate whether it is 50% or not. So the next question is, what happens when the principal investigator is a business owner and takes no salary, and how that impacts the direct base? Regardless if the PI is taking a salary, you should still be accruing and expensing a salary, so then that would still go into the direct cost base. So the next question is, for a startup, if we don't have approved rates, is it necessary to get the approval before the grant award? The approval of your indirect rates will be part of the approval process. Oh, if the indirect rates are included in the budget, it will be part of the award process for the grant. Well, if there are no more questions coming in, I think we can maybe wrap it up at this point. And if you do, oh, we got one more. Can we allocate the time we spent on grant application process to the direct cost base? That would typically be part of the IR&D and BMP, so that would be included in the direct cost base. So there was another question about a copy of the materials. Yeah, we will be sending those out after the end of the webinar, as long as you've registered.
Thanks, Julie. I think if there are no other questions, then we will go ahead and conclude with the presentation. Thank you everybody for joining in on us with this. And as Julie and Zena mentioned earlier, we will have a link and a copy of these slides sent to you very shortly, so you can listen to the recorded webinar as well, and you can take a look at the slides at the pace that you would like to go. And I think we still have time for some comments. Are just a few last questions, and I see one or two that might be coming through. Julie, can you comment on what may be different between BNP and IR&D?
Oh, sure. BNP is going to be your bid and proposal cost, so that, like the question before that, if you incur money to actually prepare the proposal, that would be a bid and proposal. IR&D is going to be an internal research and development. When you're doing internal research and development, that's really not related to any specific project.
Okay, very good. Go ahead. Did you have something else?
No, I think that was it.
Okay, and we do not post any Q&A, but the Q&A will be part of this presentation. So any questions that were asked and answered will be a part of the recorded webinar. Here's another question. Is it possible to charge only an F&B rate, no other overhead or G&A?
If that's what works for your company and that adequately recovers all your indirect costs, yes, you can do just a F&B rate. And health insurance, there's a question about health insurance. The health insurance would be included in a fringe benefit rate pool if you use a fringe benefit.
Okay, and another question.
IR&D and B&P is always confusing. It's indirect, but it goes into the total cost input base in order to pick up its fair share of the indirect costs. It's very confusing. It appears that it's an indirect cost, but it's almost treated as it's a direct cost.
Okay, very good. Very good. And that's it. I believe that's it. Julie and friends in Chicago, thank you very much for your time and effort. We appreciate that. If anybody has any questions related to the application, the grant application process, registration, and so forth and so on, please direct those to the number that you're now seeing on the screen there, or the email address that you see there. If you have any other questions for Julie and the Chicago team, please email those to the address that you also see there, SBIR-STTR@science.doe.gov, and we'll get those to Julie and her team there to address and get back with you as well. But so thank you all very much for joining us, and Julie, again, thank you very much. This concludes our webinar.
Thank you.